Hello and welcome to BQ Prime, and you're watching IPO Adda. And the company in focus today is Paradeep Phosphates, as a fertilizer company based out of Bangalore. And joining me is Ms. Narayanan Suresh Krishnan, who is the managing director, and Mr. Sabaleel Nandy, who is the chief operating officer. The IPO is opening on May 17th and closes on May 19th. Price between 339 and 42 rupees. It's a fresh issue of 1,004 crores and OFS of 11.85 crores, that the government of India is exiting. As a shareholder from the company, and some of the promoters are selling part stake in the company. That puts the market value of the company at nearly 3,400 crores at the upper end of the price band. Mr. Krishnan and Mr. Nandy, thank you very much for joining us on BQ Prime. To begin with, Mr. Krishnan, if you can take us through what are you going to use the proceeds for?
Thank you for having us over. And as we have very clearly stated in our prospectus, we have three uses for our fund. The first use is primarily for an acquisition that we are doing, wherein we are purchasing an asset based out of west coast of India, which will give us an additional capacity of 1.2 million tons. So the 1/3 of the proceeds will be utilized towards this. The balance 1/3 of the proceeds will be utilized by us in the company for primarily paying off some debt, which is there for our working capital purposes, and the balance amount will be available with us for general corporate purposes. And the last 1/3 that we have is primarily the OFS, wherein Government of India's stake sale is happening. And I wish to confirm out here that the primary OFS is for Government of India's stake sale. As far as the OFS of the Zuari Morocco Phosphate is concerned, which is the other promoter, this is only to cover the cost of government sale and not for any other purpose.
Agreed, Mr. Krishnan. Just to get into the acquisition of the Goa facility, you've been trying to that, and I think it's stuck in NCLF now, if I'm not wrong. Where are we, and how much time will it take for the entire transaction to get completed?
Well, I wish to confirm that as far as the Goa transaction is concerned, the asset that we are buying, it's on a slump sale basis based on a business transfer agreement that we have entered into. We do not have any NCLT process out there for this acquisition. And we will be able to conclude this transaction within weeks of closure of the public issue. And we believe that we will have the capacity being ramped up there in the very first quarter post our completion of the public issue.
I'm saying that because I think in the RHP it's mentioned that some of the minority shareholders of Zuari Agro have approached NCLT.
I wish to tell you that that NCLT petition has not even been admitted, but all the corporate approvals are in place for this acquisition. So we expect to complete this within weeks of closure of the IPO.
Yeah, if I can come in here.
Yes, please.
So this NCLT is a year old. It is more given in the RHP more as a disclosure in the risk factors, just so that the company, in its endeavor to make everything transparent, has put it. But it has this application has not even been accepted. It is already a year. And those minority shareholders had actually voted in favor of the sale to Paradeep when the shareholder approval was taken.
It's better to clear it up, before the IPOs, because it's mentioned in the RHP. So I thought, let me bring it up here. But to get into the Goa facility, Mr. Nandy, what kind of access, market access, will you be getting once the facility gets integrated, and how much time will you take to integrate this facility?
So, in terms of the attractiveness of Goa, one of the key features that this plant offers is the market access. And therefore, I'm glad that you started off this question. So the key markets in which the products of the Goa plant sells are Maharashtra, Karnataka, MP, Chhattisgarh, Telangana. And these states are what we call the agriculturally more advanced states. Why do we say that? Because these states together account for 44.2% of the total phosphate sales in India. 44.2% of the total phosphate sales in India.
Okay.
And almost 95% of the total sale of the Goa plant were in these states. So for the PPL, the new PPL, which will now be having two sites, one in the east coast and the other in the west coast in Goa, the acquisition is of strategic importance because of the access to these key markets. In fact, the other point so far, with Paradeep being primarily in the eastern market, and this is true with other players in the competition as well, we were dependent on the performance of the eastern market, which means if there would be flood in east, drought in east, our fortunes would move up and down. But now with us having a site in the West Coast and then access to the markets in the West Coast, we believe as a company we have significantly de-risked ourselves, and we would now be in a position to leverage from both the market performances. And this is something that very few players of our size actually have in the country today.
Mr. Krishnan, if I look at your key markets as of today, it's Orissa, UP, and Maharashtra, which account for nearly 50% of your market, with Maharashtra being nearly 26% of the market. How will Goa transform this entire market share for you?
Primarily, if you look at our markets currently, you're right that we are based out of the eastern markets in India with some presence in Maharashtra. The Maharashtra presence of Paradeep Phosphate is primarily in Nagpur and the region around that, which is the Vidarbha region. Whereas the access that we really going to get post the Goa acquisition is going to be the Marathwada region, which is very strong for our brand and which is present there. Besides that, we will have the access to Karnataka state and Andhra, Telangana in entirety. So these are key markets that really come to us where, as Sabaleel mentioned, these are very, very progressive markets where the farmers have adapted to farming technology and also the nutrient management in a very efficient way. So these are very, very positive and important states for us. And besides this, you must also realize that during our journey as a part of our strategy, Paradeep Phosphate today, which is at 1.5 million tons of capacity as of December last year, we are expanding ourselves and our capacity is going to be increasing to 1.8 million tons. During the last 12 months, all the effort that we've done is to make really our manufacturing capability far more fungible between various products which are required in India, whether it's a DAP or other grades of NPK. And that's really the core to our strategy in terms of our ability to offer a wide range of products to the farmers in these markets. I think that's key to our success going forward. We are not going to be dependent on one product, whereas we are in a position to really offer in our combination close to about 7 to 8 grades of fertilizer products, some of them being absolutely unique. That's the first and most important thing that we get to see. And the second important thing that we get to see is in these progressive markets that we are in, there is a lot of awareness in terms of soil health, soil improvements, and the way the soil needs to be managed to effectively get the right kind of output, so which is again a big positive for us. And third important thing you must also realize is the markets that we are in, Eastern UP, the Bihar and West Bengal, these markets are also evolving from their traditional base in terms of what they are and moving towards other grades of fertilizer. This transition, we believe, is going to be a journey which will be long-term in nature. But we are well positioned to support the farmers in all these regions. Because I must like to tell your viewers here that we as a company focus a lot on farm and farmers. And that's where the entire business comes to us from. And when I say farm and farmers, the big success for India and the way it's going to happen, and is already the transition is happening today, is a clear focus on soil health. And soil health is going to be absolutely an important parameter, which is going to decide the kind of cropping that we're going to see, the kind of nutrient requirement the crops that the field will have. And this is exactly where we as a mature phosphate focused company are going to play a very key role in the coming years. We are already a major, we are the second largest non-urea manufacturer in India. We have clear access, and we now get access to much larger market and literally a pan-India presence that we end up getting here. And this is where we believe the entire fortunes of the company will be based. And we are very excited by the fact that we're getting mature markets along with the emerging markets where we see prospects for our products.
So your eastern unit is more mainly on NPK fertilizers, and Goa has largely urea. Is there a way to?
I like to just confirm here that the way the capacity is there, as far as our Paradeep phosphate, which we have today, we have a capacity of 1.5 million tons, which is split between 4 units of granulation trains. And when you look at these 4 units of granulation train, we have a complete fungibility in this between various products, whether it is diammonium phosphate or other NPK grade that we make. And it's important to note that as far as the Goa acquisition we are doing right now, this is also a phosphate-based acquisition. Goa has a total capacity of 1.2 million tons, of which 0.8 million ton is phosphatic. So we are actually consolidating our phosphatic base by adding 2 more granulation trains. And these granulation trains will also help us to ensure that we are able to give a much wider range of fertilizers in the phosphatic space for the farmer.
Mr. Nandi, if you look at the acquisition, you have nearly a debt of nearly 2,200 odd crores currently, and when Goa comes into play, I think another 1,500 crores of debt comes into the books, because
No,
the
no, that's not.
EV
No,
for that is around 2,000 odd crores.
no. So Goa acquisition, as we've clarified in the red herring prospectus, is being a Goa plant is being acquired on a slump sale basis, which is on a debt-free, cash-free basis. So none. So the debt is not of Goa plant. Debt is in the company that currently owns Goa plant, which is Zuari Agro. We are not taking any of the debt of Zuari Agrochemicals. We are just purchasing the plant.
So you're going to pay only 580 odd crores for that plant.
Exactly. So the total cost of the asset is 1,600 crores, of which 1,050 crores have already been paid. The balance, whatever is left, is equal to the IPO proceeds, the partial 55% of the IPO, primary IPO proceeds. That will be paid from it. And as soon as the IPO ends, we will be the owners of the Goa plant. The debt that Zuari Agro has remains in Zuari Agro.
And what happens to the profitability of Goa plant? Because I understand that it's not profitable for last 3 years.
No. So the reason why Goa plant's profitability has been less than optimal is because the Goa plant has not been running. The reason why the plant has not been running to full capacity is because of working capital issues that the current owners of the Goa plant have. As you know, the fertilizer business and phosphatic business in particular is a very working capital intensive business. So because they could not arrange for the working capital, the plant has run in less than optimal capacity utilization, as a result of which the profitability coming out of the Goa plant has been subdued. But let me clarify that in the past, Goa has done in excess of 420 crores of EBITDA, both in FY 16-17 and 17-18. These are the actuals that Goa has done.
What is the kind of top line that Goa will add to your existing thing and EBITDA, given that you're taking on a slump sale basis, and you will be able to provide enough working capital requirement plan?
So it is easy to look at. If you currently the one ton of DAP is being sold at roughly, it should come a little less than 1 lakh. So if we are going to be making 8 lakh tons of DAP, that is what it will be. And there will be 4 lakh tons of urea. And you know what is the price of urea plus, I mean, when we say price, it's not just the market price, it's the market price plus the subsidy. That is the total realization. So that's how the turnover would be. I'm not giving you the specific figure because then it becomes a futuristic statement.
So, but do you think that you'll be able to turn it around in the first year of operation?
Absolutely. As Mr. Krishnan just now mentioned, we already have got the working capitals lined up because of the depth of our supply chain relationship. For example, one of the other promoter for us, as I was mentioning, is OCP, one of the world's largest player in phosphates. We are exclusive with OCP when it comes to all our key requirements, which is phosphoric acid, even finished fertilizers. So we'll be able to use that and get the raw materials necessary for Goa right from, we expect that within a month. So if we complete it by end of May, within July, the plant will be running full blast.
Mr. Krishnan, we've seen a lot of feedstock volatility which has come in the last 6 months to one year. How are you managing that kind of volatility, and are you able to pass on the entire volatility in terms of pricing, and the government is able to compensate you for through subsidy for that?
Yeah, well, it's important to note here that the volatility has been there in this business since January of last year. Yeah. And we have been seeing that the global prices, both for commodities which are connected with fertilizer, have spiked quite a bit. And if you notice, right through the last financial year, given the importance of farm sector in India and the farm productivity in India, government support to the farmers have been quite significant, and which has also been with respect to fertilizer and fertilizer inputs. And government has not only protected them from the price hikes which have happened in the past, they've also ensured that the profitability of the industry continues to be robust, and they have paid all their dues well in time, which is a very, very positive thing. And as you would have seen recently also in the month of April, for the current season, which is between April to September, government decided that the farm sector should be well protected, should be encouraged to continue to produce, keeping in view the fact that food security is of paramount importance under the current global economic situation. And they have also provided for incremental budgets to ensure that the working capital and the needs of the industry and the price lines for the farmers are well maintained. So we believe that government has been robust in terms of the way they have handled this sector all this while, and we expect that as a serious stakeholder, that commitment of them will always continue.
How do you see demand for fertilizers in FY 2020 to 23?
Well, you see, as far as the demand is concerned, today, everything that is being manufactured in India, everything that is being imported in India gets sold fully, primarily because there is a global shortage situation, and India also is seeing a very tight position of demand supply. But fortunately for us, we have been able to manufacture and procure the right quantity of fertilizer required for the local market. So I believe that the capacity utilization of the Indian industry will be good, and all that is produced in India will get effectively absorbed.
And because I was looking at the inventory days, and it has come down significantly to 14 days or so.
Yes.
And why is that? If the demand
That
is
is
good
primarily,
enough,
no,
or is it a management?
that's primarily because we are the only one. We are one of the few companies who have been able to deliver the full volumes in the country last year, and we continue to do so. And given that there are shortages, more because of the fact that imports are not happening in India. The imported fertilizer, if you look at the space and phosphatic space that we are in, normally India imports about 4.5 million tons of DAP, and those imports are not readily available at the right time. And hence, all the domestic manufacturers, whatever we are making here today, gets absorbed immediately in the market.
What about rollover of subsidy? Because that's the biggest problem that your industry faces, right? Even if you're selling it and your subsidy comes to you, but it gets rolled over to the next fiscal year.
No, I think this perception needs to be corrected. As of last financial
year, I'm not
year,
saying that CRISIL is saying it in your report.
No, that used to be the case. I'm just saying that if you look at the trend that has happened now over the last 12 months, Government of India has paid all the dues of 31st of March till the third week of March 2022. So Government of India has been very proactive in ensuring that the fertilizer subsidy payouts are happening on time.
So you're saying that there are hardly any rollover of
no,
subsidies?
Last year did not happen. That's true.
And what about this year? Because we started off with a very conservative budget, and then in April we saw that it's going up by nearly 40-50%.
Well, government has already approved. The Indian cabinet has already approved an increased allocation.
So do you see further increase going, considering the fact that prices are still firm for many of the products?
Well, the good thing is that government has already recognized the current prices of fertilizer as they prevail in India as of end of March 2022, which is a very positive trend. And the spikes that we are getting to see thereafter is more short term in nature, and we believe that the prices are getting to a point of being stabilized. So I think the provisions have been robust, and government, if you look at their track record over the last 12 months, every time there was a need, they've come in very quickly to correct the same. They've not waited for too long. Last year, they made an announcement in the month of May 2021. They came again and made an announcement and improvement in the month of October, and they cleared all the budgetary dues in December to March. So government has been proactive, and we are quite optimistic on this front.
What about the entire consolidation in this space? Are you seeing some kind of consolidation? Because you have gone and acquired a parent facility in Goa, but your parent also has other fertilizer facilities within the country. Do we foresee a scenario where consolidation takes place through Paradeep Phosphates going forward?
You must realize that the fertilizer industry is fairly consolidated. There are not too many players there in terms of the large scale players who are there. That's the first point. The second point that is concerned is fertilizer being very critical, and the growth of this industry and the prospects of the industry are quite bright, given the kind of needs that we have in agriculture. This is certainly a sector which will attract investment in our view. And you already have a major in our company, which is OCP, which is the largest phosphatic player in the world, which is already there. And I must confess that we have a very robust strategy and a program that we are implementing. The management focus over the next 12 to 24 months will be to ensure that we deliver on what we have taken on, and then we will take things forward.
No, the reason why I'm asking this is because your parent also has other fertilizer companies, and those are also those will also be competing with you in the same market at some point in time. So is there a and so it brings in a conflict of interest because of interest as well. So is
Fortunately,
there
no. Fortunately, let me tell you, there is no major market overlaps which are there today. And wherever we are serving in the phosphatic field, there is no other overlap from any of our other group companies that we get to see. That's the first point, And as far as further consolidation from the promoter end is concerned, I mean that's not we're not looking at any transaction at Paradeep Phosphate at this point of time because, as I said, we have a robust strategy in front of us, and that's what the management will endeavor to complete, and that's where our board is also committed.
Mr. Nandy, can you take us through your working capital management strategy? How you manage it? Because that's the biggest thing for you, right? In the sense, the subsidies account for 30-40% of your revenues take time to come in. So how do you manage your working capital?
So we deal with a consortium of banks. Around 10 banks are there, comprising both of public sector banks and private sector banks, led by State Bank of India, who give us the working capital lines. These are non-fund based limits, and some are fund based limits. They come to us at a nominal interest rate. And so we have, for example, just to throw certain numbers, we have been having something like 5,000 crores of such lines so far. And we have applied for almost doubling those lines with the acquisition of Goa, the organic expansion that is expected to be completed by the end of this year in Paradeep, and the fact that prices of raw materials have significantly gone up in the global market. So a combination of these three reasons is the justification with which we have requested for an augmentation of these working capital lines that we have. But the principle of management of working capital is through a combination or a consortium of banks.
What is the kind of interest rate that you pay for that?
Basically, these are international borrowings that we do. So these are basically letters of credit based borrowings. So including the hedge cost, our average cost is roughly about 5%.
And does it change because now the government will not be a promoter of the company and exit from the company?
No, this will not. This is standalone. This is a standalone based on PPL's own performance, and we do not expect to see any other change.
So the interest, the rates remain same because government moves out because of.
Primarily, if you look at it, we don't really rely on any major fund-based facilities from institutions in India. These are letters of credit which are available to us for a 6-month period, and the cash flows ensure that they are paid off, and we only have to pay the global interest rates for this. And these are the strengths of LCs opened by leading banks in India. So nothing changes really in terms of the shareholding. If at all any, I think we get strengthened after the IPO.
Okay. Does it, does the firming of interest rates globally impact you in any way, given the fact you have this working capital cycle which is there, and what kind of impact will it have on your books, given the?
Well, primarily you're right. As the interest rates do go up, it has an impact on all companies, including us. So there is one will see a 30 to 50 basis point increase in various rates, whether it's in domestic market or international market that we get to see. But the compensating factor for all that is the fact that we look at total cost when it comes to the fertilizer that we make and sell. So in the total cost, this is a very small part of the total cost that we have, and we believe this can be well absorbed and taken care of.
What about capital needs, Mr. Nandy? Do you have any other capital needs for expansion, CapEx plans for the next 2 to 3 years plan? I know you are doing an organic expansion in Paradeep, and I think there's a 73 crores CapEx that plan is happening in Goa. But aside of that, is there anything more that you're looking to expand your facility?
No, let me clarify whatever is there in the red herring prospectus. So we are organically expanding our capacity in Paradeep, which used to be 12 lakhs or 1.2 million a year back, to 18 lakhs or 1.8 million by the end of September this year. And almost 3/4 of this expansion is already behind us, which is last year we have done 3 lakhs out of the 6 lakhs. And now as we speak, we're about to finish 1.5 lakhs as well. So close to 4.5 lakh of the 6 lakh expansion is already behind us. The remaining 1.5 lakh will be completed by end of September. This total cost of this expansion is 200 crores. Again, bulk of it has been spent The remaining that is needed for the last 1.5 lakh will be done in the next 3-4 months. In terms of Goa, it is giving us, as we mentioned, 1.2 million tons of volume. And there is, as we have mentioned, an energy improvement project in the urea part of the plant, which is around 73 crores that we are going to spend. That will be completed by end of October next year, October 2023. We're also doing a backward integration initiative in Paradeep, which is also there in the red herring prospectus, by which our total capacity of phos acid that we make, it's a very, very critical piece of our strategy of getting more margins or remaining ahead in the margin curve amongst the phosphatic players. That capacity of 3 lakh metric tons per annum is going up to 5 lakh metric tons per annum. So that also is there. That is also going to be completed by this year. So in terms of committed capex that we see, apart from the sustenance capex that we do every year, which is largely equal to depreciation of the entities, the committed capex is actually all getting done right away. We don't have anything that we need to spend next year onwards.
I'm asking because I was looking at your cash flows, and there I saw that you had roughly around 1,000 odd crores of investments that got done. I think this mostly it could be because of the acquisition which you've done. So will that and the cash flows are negative, net cash flows basically. So in FY23, as you go forward, are we going to see positive cash flows coming in from operations?
Yes, of course. The 9-month performance that we have given in the RHP, we are at an EBITDA of 592 crores, which is in fact higher than last year 12 months performance of 561 crores. So, and we expect that and we believe that this performance has been possible because of higher efficiencies that we have realized in our operations, as well as because of some of the benefits of backward integration that we have been able to implement in our sites.
What about site on EBITDA margins? Because those are under pressure a bit. I think in FY20 core EBITDA margin from operations were around 11%, FY20, I think, and FY21 it was 10.5, and now for 9 months it's 9.7. Now I'm not asking other income as part of your EBITDA. I'm just checking core EBITDA from operations.
I'll clarify. For a business like us, and this is an industry phenomenon, not about PPL in general. Any industry where the cost of raw materials account for a large portion of the turnover, the EBITDA margin is not considered the right yardstick. For us, the right yardstick that we use is EBITDA per ton of product sold. So on an EBITDA per ton, and this is also based on the 9-month figure that we have given in our RHP, the last years, which is April 2020 to December 2020, our EBITDA per ton was around 4,400 rupees per metric ton. This year in the 9 months, the EBITDA per ton has gone up to 5,463 rupees per metric ton. So there has been a healthy increase in the EBITDA per ton.
Okay, no, I get that, but your EBITDA margin, why I'm asking about the EBITDA margin is that are you able to pass on the entire cost of volatility which you're seeing to the end customer? Because what it seems that there is some absorption which is done within the company as well from the margin.
No, as I said, the EBITDA per ton that we are getting year-on-year basis and the improvement that you get to see in the 9-month results clearly indicates that the price increases have been passed on.
Is it entirely been passed on?
Entirely. Because we have managed to maintain the rupees per ton of EBITDA for the product right through the 9 months of the last financial year.
The absolute EBITDA has gone up, the EBITDA per ton has gone up. All that we are trying to tell is that EBITDA margin for our kind of business is not right, because that would be like an unfair pricing that we are passing on to our end consumers, something that we do not usually do.
By when do you expect, Mr. Krishnan, the entire integration of Goa facility to happen?
Well, as far as we're concerned, as I said, within weeks of completion of the IPO, we should have concluded the business transfer agreement. And within the very first quarter of that, we would have got the entire facilities integrated with their operations. As you know, that we are already into a phosphatic manufacturing in a big scale. So this is something that will be done well. And Goa is a recently upgraded plant. and in good shape in terms of his ability to run. We ourselves run the plant for about 6 months to see his entire capability, and we are confident that within the first quarter of our acquisition, we will have this capacity up and about.
You also have some bit of exports, I believe. Is there a definite plan of how to increase that as well?
Well, if you look at it, India is one of the countries which can directly export to places like Nepal. Nepal is a landlocked country, and for their fertilizer need, they have to source whatever they source through India. And Paradeep Phosphate has been exporting to Nepal very consistently over the last 5-6 years. And we normally sell something between 50,000 tons to 100,000 tons. And this is something that can be taken care of. But right now, everything would depend upon the demand supply, because our consumers in India, our primary consumers in India, demand is quite huge. So we are getting to focus on that. But I'm sure in the coming years, we will get to see that happening.
You have a close eye on how the sowing season is taking place. How do you see Kharif happening? Do you see some kind of disruptions? Because we saw about wheat is going to be hit because of disruption. So how do you see the entire play happening?
Well, you see, the Indian agriculture system has had a good year last year, and I think the farmers are very optimistic in terms of their own prospects. So when it coming to the Kharif right now, the kind of offtake that is happening, the kind of inventory buildup that we are getting to see for our products in the field, it is very encouraging. We believe that the season is going to go well. And there are two very primary reasons for it. One is the offtake of fertilizer that we get to see. Second is the fact that the dam levels in India are at a very, very comfortable situation. So we're not so much dependent upon the fact that how the monsoon is going to evolve. Outside of that itself, they are in a very good state today. So the summer crop is something that looks to be well poised for a strong season.
Mr. Krishnan and Mr. Nandy, it was a pleasure talking to you today on IPO Adda. The Paradeep Phosphate IPO opens on May 17th and on May 19th. Price between 39 rupees and 42 rupees at the upper end of the price band. It's a fresh issue of 1,004 crores and OFS of 11.85, where the primary seller is the Government of India. Thank you very much for watching IPO Adda on BQ Prime.
Thank you.
Thank you.
Thank you, sir.